As Mashudu says, the market a little bit down today, only by 3 basis points. Not much reaction to the MPC's decision to keep rates unchanged. Was that to be expected?
Well, yes, that is exactly what I expected. In my perspective, the market is, for over the past 2 weeks or so, has been in kind of a holiday hangover mode, whereby even though the market is open, a lot of dealers and traders are still in kind of a strategy room situation, whereby we're looking forward into the year and seeing what it will bring, and thereby trying to play out possible scenarios before actual investments are made. So even with the MPC decision yesterday, I did not quite expect a lot of movement in the market today, and that is what has come through.
Also surprising to me, and I'm a novice, we know this, is that the Kenyan shilling is feeling a little bit of dollar pressure today. Now, to a large extent, actions taken by the central bank have always been geared at shoring up the currency, supporting the currency. Definitely 4 interest rate cuts near the end of 2011 has worked, but this decision seems to be a little bit counterproductive, or am I reading too much into it?
Well, my take on that particular decision is that it really, the central bank did not have any chips to play, in that over the past 2 months, right from December, we've been calling for a hold on the MPC to hold the interest rate so that there can be some filtration effect of the previous decisions into the market. Now, having raised the rates so high in December, the market really had not quite filtered the information, and was still, the central bank really had to go back to the financial institutions and ask them really not to raise their rates further. So the central bank could not actually go out and increase the rate, because the financial institutions would really also have in turn increased the rates, and thereby absolutely slammed on the brakes on the Kenyan economy. So it's an aspect of not really having too many chips on to play for the central bank. That is my take of things.
Right. For investors, the things that they'll be looking at is what the level of the borrowing rate is, what the level of inflation is, the stability of the currency. So the currency showing a little bit more stability. We're expecting inflation to come down, and we've already started seeing an easing of prices in the month of December, and rates unchanged. As a formula, does that make it attractive for investments?
Well, in one particular sector, which is the fixed income market, that looks like a possible favorable play in terms of the interest rates possibly coming down. So the bonds will be once again hopefully in the money, and that is the sector that I would really be keen to see, especially once we get the inflation figures later this month. So otherwise, on the equity side, it's still really a wait and see, very dicey situation, and similarly on the currency front. So really at this point in time, it looks like either you stay in cash or the fixed income play.
Let's talk about what we're likely to see on the equity side, because particularly the banks, which have been great performers, they're starting to feel the pressure of rising rates. It's going to impact on their ability to grow their loan books, on people's ability to service the debts and the loans they take out from banks. So what are you expecting to see on the banking front in early 2012?
Well, my expectation is that we will see quite some significant growth when the earnings do come in, at least 10% pretty much across the board. But to take you back briefly on the MPC decision, in their communique that was released early this morning, one of the things that they mentioned, and many seem to have skimmed by it, is that from November, the private enterprises have really not been borrowing a lot from the banking industry. So that really brings out the fore that brings to the fore a lot of concerns that analysts have had, that these high inflation rates really will have tremendous impact on the economy, and that doesn't augur too well for the banks in terms of customer defaults, in terms of new lending, and with that in mind,
Yeah.
one would really play banks at a very cautious kind of
Right.
play.
And finally, Kimathi, where are the benefits and the gains going to come from? Because we're already told the property sector in general, property developers are raking in returns of 15%. So real estate seems to be the one place where people could make a killing, and that reflects in the performance of cement producers as well. Do you concur?
It's a bit dicey at the moment. If you look at the cement players throughout the year, their stocks have pretty much been flat. And when you go back into the actual economy, you see a lot of developments being put on hold because of these very high interest rates. But the opportunities really are there in terms of real estate investment trusts coming on to the Nairobi Stock Exchange, Nairobi Securities Exchange, and we've had a lot of interest on that front. So the opportunities are abound. Only that, unfortunately, real estate is as a play which takes some time to mature and come through to the market. So all in all, opportunities abound, but we begin to see some slower growth.
Right.